I think we are potentially going into a situation with major headwinds because the Fed, for the first time, has switched its posture from dovish to hawkish. Powell removed the word transitory. And then he gave a lot of clues saying, inflation's out of hand. It's not what I thought it was. I didn't think, he was originally saying inflation was going to go away after a few months. But now he's changed his view. And obviously, it's clear to everybody, the world, that inflation is out of control. A number of major central banks have had to tighten by 25 basis points. Powell is doing his $30 billion a month tapering program so that by March, there's going to be no more money being printed. And then that gives him room to tighten. And the futures, the CME Fed futures markets already pricing in the odds of the first rate hike in May. I think they're pricing at a 67% odds that's going to happen. Now markets don't like this. The punch bowl is being taken away. Every time in the last decade that Powell tightens the balance sheet, markets stage either a taper tantrum or they just go into full-blown correction. And if you look at the S&P 500 and NASDAQ, every time they stage about a 20% correction off peak, Powell cries uncle. Powell comes, or the Fed chair, whoever that is, they come in and they say, you know what? We're going to have to reverse our decision to tighten. We're going to have to loosen again. We're going to have to print more. And I think that that is the uncle point once again. Right now, major averages are only basically 3 to 6% off their peak in the U.S. markets. 20% is a long way down from there, especially when you factor in all the stocks that are overinflated in terms of their PEs, which are way out of control because of QE. Quantitative easing has helped a lot of these assets reach way overvalued levels. So those stocks are all vulnerable. If and when, I think it's not a question of if, it's a question of when these major averages will hit that minus 20% mark. This is what they do. The only time they didn't do that is during COVID. That's a black swan environment. They corrected way more than 20%. And what did Powell do? He immediately came on and said, okay, we're going to start printing. We got to start printing by the trillions. And the last 12 months of money printing in the US is greater than all the other years combined. M2, that is the money supply. M2 never contracts, especially when debt gets to these levels. We are at the largest levels of debt. The US actually recently exceeded even the debt levels of World War II. Interest rates are at 5,000-year lows. I mean, everything is so stretched, it boggles the mind. And if you actually look at the Fed funds rate, which is at 0 to 0.25%, it's been at 0 to 0.25% for a long time. And you look at inflation as measured by the CPI being the government manipulated number. When things in the basket start to go up too much, they get removed. So it doesn't represent real inflation. And nevertheless, that CPI number is massive. I mean, it's out of control. And if you look at it relative to the Fed funds rate, there has never been in history such a massive difference between Fed funds rate and where the CPI is at. Therefore, the Fed has no choice but to tighten. And when that happens, the markets are going to undergo a correction.